What's up, Bob Beckett here, and in this video, I want to literally tell you why you're failing at trading Forex in crypto and pretty much anything that you're trying to trade, right? So, and it might shock you, okay? I'm going to tell you straight up, it's not the strategy. In fact, you could probably take most of the strategies that you learn off of YouTube and make it work for you if you know this one thing. And the fact is when I first started, first of all, I wish somebody would have told me what I'm about to tell you. They made it super, super boring, and they made it really, really bland, and they made it seem like it's like, it's just sort of important, and you might hear it from some gurus per se. I don't claim to be a guru. I just claim to be a guy that's crazy and freaking doesn't stop, right, until I'm successful. That's how I've been everywhere in life, right? So with that said, here's why it was boring, and here's why I didn't listen, okay? Risk management, all right? Who's heard risk management? Like, when you hear that, you're like, I don't want to deal with no freaking risk management, right? Like, I want to get rich fast, like. But here's the thing: if you know how to do proper risk management, I'm doing quotes in the air. If, obviously you can't see me, but if you know how to do proper risk management, it's actually exciting, right? So if I could get anything across to you today, all right, I'm gonna use my mouse to do that. Risk management, right? Let's use a better term. It's all about risk reward. All right. And I want to focus on the fact that risk is actually a good thing. Okay. Meaning, without risk, you can't win. Okay. Here's the thing, guys. If you have losses, that's totally awesome. If you look at it the way I'm about to teach you, risk, your losses will be exciting for you, okay? But only if you do it properly, right? Now, first and foremost, I would recommend, if you're on a small account and you're not excited about trading the small account, if you can get to where you can get 0.5 to 1% per day, you can get virtually unlimited funding from prop firms, right? Meaning, like for instance, FTMO, this is just to keep you understanding what I'm saying here, because this adds up. FTMO, you could do a $200,000 challenge, right? They'll fund you $200,000 and you can keep 70% of that per month, right? So if you could do, let's just say 0.5% per day. I'm not telling you to do 10%, right? Because here's the thing, on smaller accounts, I get it. Like, unless you're doing like 10, 20% risks per trade, it's not exciting, and it probably won't keep you trading long, and not long enough to be successful, right? So here's the thing, guys. If you can do this daily, 0.5 to 1% a day on a 200,000 account, which is not that hard to get, by the way, especially if you work with me, I'm just saying, that's $1,000 a day. After your cut, that's freaking $700 per day. Now, with this in mind, okay, I'm going to teach you proper risk reward. I'm going to say screw risk management. I hate that word. It's so unexciting, because here's the thing. Reward is awesome. We're going to talk about RR. That's what I'll call it. All right. So let me go up here. Now, check this out. And I'm going to show you real world examples with however, whatever strategy you want to use. I have my particular strategy. I have my indicator that I spent at this time of recording this over 29 grand that gets me amazing risk reward trades. Okay. But that's not the point of this video. I want to get you excited about trading again, or excited. Maybe this will be the breakthrough that you freaking need. All right. So let's just say you did 1%. Okay. I recommend nothing more than 1%, maybe 2% risk. Okay, max, especially if you do what I do. In fact, you can get away with 0.25% with the way I trade risk of a total account, right? So if you had if you had, I'm going to keep using the 100,000 as an example because I want to get you funded, right? That's where it's all freaking at the end of the day. Get you funding, and then you can make a ton of money. With a 0.25% risk, that's only $250 risk, right? 1%, it's obviously 1,000, which I like the 1% personally. So we'll just stick with 1%. 1% risk. You're willing to risk. Now, here's the thing. Most traders with these little strategies and scalping strategies, excuse me, they're going for 1 to 1, 1 to 2, 1 to 3. Very rarely do I see people talk about anything higher than, a 3, right? What does that mean? Okay, let's use an example for this, okay? Let's say you win one, and then you lose 2. Well, now you're negative, right? So 1 to 1 is out of the question. Never do a freaking 1 to 1. Here's the thing. Let's just take 10 trades. 10 trades. And you won, I don't know, 50% of them. Or let's say 80% of them, right? That means you're up. You're up. That's totally good. That means you won 8 and lost 2. Oops, sorry. Lost 2, which that means you're plus 8 reward minus 2 risk equals 6% account growth. That sounds amazing, right? But here's the thing. There's a couple things that happen. For one, when you're doing this, you have to be extremely disciplined, and you have to be extremely good and somewhat lucky. Let's face it. You're not going to always stay 80-90% win ratio, right? And even if you are, what if I told you win ratio means absolutely nothing? Pips mean absolutely nothing. Really, what you need to be focusing on, period, is risk reward, because eventually it's going to bite you in the butt. And then before you say, well, Bob, I win 90% of my trades. Well, at the end of the week, are you withdrawing? Is your account growing? Or am I right about this? Here's what I mean, extremely disciplined. You've been right 90% of the time, right? You did everything perfect on the 10% one, the last one. And because you're so mentally jacked, because you won 90% in a row, because you're going for win rates, right? That's horrible. It's horrible to go for win ratio. Horrible to go for win ratio. I used to think that was the best way to go. But because you're going for that, you hold on to the trade, you lose everything and then some, right? So all of a sudden, this 6% in a perfect world that you took right here, doing 80%, doing a 1-to-1, turns into -2, -5% account. And you tell me if this doesn't happen to you, right? The truth is, you need to focus on, in my opinion, more than 1 to 3. Okay, because mentally, eventually it's going to get you, right? You do the same thing for 1 to 2, 1 to 3, whatever. What if I told you you can literally focus on what I do and focus on 1 to 5 to even 1 to 40. There's a 1 to 42 we did today, at the time of this trade. Let me see if I can find it. Where was that? GU? Hold on. Right here. Is that 1 to 40? Yeah, look. 1 to 40. Oh, now it's at 1 to 43. Let me tell you what that freaking means. All right, this 1 to 44. That's 44 reward on this trade that we took. And I think it's actually going to hit 1 to 167. But let me go back to where I was typing, all right, or writing. Let me show you what 1 to 42 looks like. Or what was that? Let's call it 1 to 42. How many times can you lose before winning on this? Let's flip the script, right? This is the secret. This is absolutely the secret. -1. You could lose 9 times. You could lose 20 times in a row. Okay? You can lose 20 times in a row. you hit a 1 to 42, you're positive 22%, right? Positive 22%. You see the difference. Now let's use a more like realistic. I mean, I know that the other thing doesn't look realistic, but it's something we did. I mean, it's real. I know it's hard to believe because you can't do that, they say, and especially not on NFP week, and especially on a holiday week. This is Memorial Day week with NFP, and we did this stuff. I mean, it's crazy. But let's just say you averaged a 1 to 7 risk reward. That means you can literally lose 6 times in a row. Let's do it this way. Let's do a 1 to 10. Let's say you only take 1 to 10s, and you lose 9 times in a row. This is just easier math for me. 9 times in a row. Minus 9R. You win the 10th one. All of a sudden, so plus 10 equals plus 1%. Now, I'm just giving you the worst scenario. You're still up to your account 1%. Now, if you go back to this example that I showed you, where is it? This one. If you could just get 1% a day on a funded big account, or maybe you have the money, whatever, 1% is $2,000 that day. What can you do at $2,000? See, that's the way you got to think, right? How can I expand my funding versus how many trades can I take? You know, because I take just a couple of these a day, and guys, you can hit amazing numbers. My win ratio is more like 50-60%, right? Depending on the week. All right. If I win 50% of 1 to 10s, okay, let me just show you this. If I win 50% of 1 to 10s, 50% win rate, and this is just, you know, without me really trying. If I just win 50% of these, that means what? I lost 5, so minus 5R, minus 5 risk, or minus 5 reward, whatever you want to call it. But guess what? If I won 5 in a row, that's plus 50. So equals minus 45. I want you to see this. I want you to see this. This is why you have been failing. If you did 1%, I mean, that's plus 45. That's 45% account growth, right? With only winning 50%. Do you see why winning doesn't matter? The win ratio does not freaking matter, right? Now let me show you how easy it is to get to 1 to 10s, all right? Now you could take any strategy. I'm just going to give you a couple examples with like my indicator, right? So let me go to like a different pair. Let's just do Euro USD. Oh, that one we did too. Look at this. That was a 1 to 7 right here. It was actually a little bit better. We did it right here. So that was a 1 to 13. Went above that high, not that high. We did this one the day before. 1 to 21 right here. 1 to 21. All right, let me show you how easy it is. Let me turn on my indicator. And this is my strategy. You can use your own strategy. You can contact me for my strategy. You can join my mentorship. We could just kill it together. All good. Or you could just take this advice and freaking go kill it. It doesn't matter to me, right? I kill it at trading. That's all that matters. We're good. So I'm just going to leave it like this. We're just going to look. All right. So if you see here, basically, here's how to trade my strategy right here. For instance, I would draw a trend line. Boom. I wait for it to hit the 20. This is the 20 EMA, 21 EMA actually, with the trend. This is built into my system. And then as soon as it breaks above this, closes, you could put your stop right here. Boom. You put your stop right here underneath the low and take it to this high right here. Simple as that. That is a 1 to 11. There's one right there. All right. Let's do it again. Let's take I'm not going to do this all day. I just want to show you how well this works. You could take this with a lot of strategies. There's so many different strategies you could do it with. I think mine's the best personally, but I'm kind of biased. Let's see, short. So what did it do? It closed below, came back, touched the 20. You get in, you move your stop above the high, you go for the low. I would probably take it about in that area right there. That is a 1 to 8.5. If you would have taken it a little bit lower, it hit almost a 1 to 10 right there. All right, let's just keep going. Stop or right there. Touch the 20 already, so as soon as it closed above, I get in. Simple as that. Long. Put this below the low right here. Take it to the high. And, I'll tell people to either take profits here or see if it breaks through. It broke through, so I would have held it a little bit longer. This ended up being a 1 to 8.25. You see my point. All right, you wouldn't have got in this trade right here. This is moot. All right, you take it from there to there. Never closed. These are all wicks, I think. Yeah, it did close. Pulled back, but literally stayed above this trend and kind of went behind the trend. See how the trend call is actually down here and it went up above it. I would only take it if it went below it, proving momentum. But you'll learn all this stuff inside my mentorship if you decide to join me. If not, again, take my advice and you'll start winning a lot more. Look, this hit the 20. This is going to be a lot smaller one. But with that said, you could use a lot smaller stop loss. And I show advanced ways with using lower time frames to really, really, really zero in on smaller stop losses. But even this right here was a 1 to 3.77. If you would move the stop to this high and down to here, that was a 1 to 4. So there's different ways you could trade it as well, right? Let me just go back. All right, this is perfect. Watch. Boom. Oops. Take that to this trend. Broke below, pulled back right there. So this one I might not have even taken, but it did pull back and close below the 20. So you could take it from there to there. This one you never got in. Look where the trend call ended. It never broke above. This one you might have lost, -1R. See, that's the thing. I want you to start thinking about how exciting it is to lose, because if you have a strategy that wins over and over again, there's a lot more to it, my training, than this, but I'm just showing you like the bare minimum, right? So boom, boom, touch 20, move it to there. Oh, this one will be good. Why did I go there? Because there's a big area right here. This area, I'll just give you a little hint. This area right here, this was the range that pushed past this break of structure right here. So in my opinion, it needed to come back to touch that to close out trades. We trade all institutionally. But this right here was a 1 to freaking 31. If you just caught one of those a week and you had a -10 week, all of a sudden you're positive 21%. You see how the importance of risk reward can be actually exciting. Risk reward is exciting. It's exciting when I lose. I could lose 3 or 4 in a row because I know the big ones coming, right? The 5, 10, 15, 20, 30, 42 that I just showed you is coming. Let me know in the comments below if this has helped you, okay? You can go apply this to your current strategy. You can just hit me up if this has helped you and you said, hey, you know what? I want to work with you, Bob. I don't care what it takes. I have mentorship where you can work one-on-one with me. You could be in my group with my coaches. We have full-blown training. You have access to all my indicators. I have an imbalance finder as well, which is fantastic. It's really, really awesome. There's so many different ways you could work with me. So hit me up. Let's get you actually going. I don't care what training you've taken in the past, all that kind of stuff. If this has helped you in any way or form, please comment below and let me know that it's helped you and that you're going to go apply it today. Risk reward is all that matters. Pips don't matter at all. Oh, and by the way, just because I get a lot of people that always ask me this, here's how to calculate your stop lot or your lot sizes. Okay, if you did 1% risk, right? You don't need a special calculator. On 100,000, whoa, it's a million. No, that's right. On 100,000, that's $1,000 max risk, right? If you had a 5 pip stop loss, rather. Oh no, 5 pip stop loss. Let's do 10 pip stop loss, right? If you had a 10 pip stop loss, so you divide your total risk by 10, that equals what? $100. $100. So the lot size would be 10.0, right? Simple as that. That's how and you're not going to lose any more than 1,000. You do that 3 times, you're down 3,000. You hit the 1 to 10, you're up $7,000. You see what I'm saying here, guys? Anyways, hopefully this helped. Comment below and let me know. Don't be a freaking stranger, and contact me if you're sick and tired of freaking losing. Let's get you successful. I know what it's like. Let's prove it to the spouse that this was legit. Let's get this to where this could be a job quitting income for you instead of just like a hobby on the side. All right, guys, God bless. Comment below. Let me know. Hit me up if you want mentorship and want my indicators. Take care. God bless. Back it out.